Morning, everyone. It's always a pleasure to be with a different set of individuals. I must say, the people I normally mix with are in the finance, but I also think that people in the real estate sector are actually one of our important constituencies. No? If you look at the market year to date, it probably top three performers in terms of sector would be number one would be the holding. Year to date registering around 12% no, from January to today. Second would be financials at right around 7.8%. And third would be property, which includes the real estate sector, at around 7.58%. No? So obviously the gains we're achieving in the economy is a confluence of a lot of factors, but I must say that the real estate sector stands out as one of the bright spots that's really buoying the progress that we've had. No? And this has been a story we've seen not just for the past year, but more than 5 years ago. And we hope that with everyone's hard work and also Lady Luck smiling back at us, that we continue to reap the gains that we hope to continue no, for the next so many years, including with the new administration. So I'll be speaking about the markets. Probably this is a topic that we always hear of, but probably just when you hear this on TV, just flip and you know go to a more interesting discussion. But to us, it's more than that, because when you talk about the markets, we always look at it as a proxy for the economy. A proxy meaning it's a good representative, not just for people who are within the economy, but also for people who are already outside or outside, but looking to come into the economy. So the first thing you look at is how liquid is the market? Is it a good market? Is it a fair and efficient market? And so it's fair enough to say that probably a knowledge or basic knowledge of where we are right now would be a good input for you as you go along with your business. So our agenda for today, that's a usual disclaimer that the statements I make throughout the presentation should be attributed to me and me alone. Okay, all right. And so we'll look at bird's eye view, the view from 60,000 feet, and then we kind of do a deep dive on what's the highlights in our market so far. And then for the third part, let's take a look, step back again. What are the global challenges? No? And then finally, let's see how we can tie all of this in. Given that we have a new political landscape, you know, we have an incoming president, and the president's men are pretty much already being identified, and see how we can actually collaborate with them to all the more create synergies in the market. Okay. But what's happening recently from the start of the year to today, probably top headline would be we've seen the financial markets rocked by this anti-money laundering issue, right? That we've seen brought about by probably the hackers. No? The cyber risk is actually one of the top risks, not just in the markets, but all over. No? When you look at cyber risk, you're talking about lots of resources that might actually be put to waste, as well as businesses being stopped right on its tracks. No? So that's something that we're very aware of and very much mindful of. But if you look at the overall lay of the land for the market, no? Sheila mentioned that, well, for the first time actually in more than 27 years, the Philippines bested China as the highest performer in terms of GDP growth, right? We registered 6.9% only for the first quarter. We're not yet even factoring the election activity and the gains that we expect to see because of the second quarter blitz, no? Leading up to the election. So that's something that's hopefully would also follow the trend for the first quarter. And you look at the competitiveness index, right? 6 years ago, where were we? When you look at the World Economic Forum's ranking, we were 38 spots lower, right? 38 spots. No? In 6 years, we rose from 85 to where we are right now, 47. So that's pretty much a Herculean task, if you ask me, over a period of 6 years. That's just one administration, right? And people might say that administration may have drunk from wells that they did not dig. Well, it depends on who you talk to, but the fact of the matter is we were able to rise over a period of 6 years, 38 notches up. So that's something that's very encouraging. And you look at the inflation rate for the first 4 months, it's very, very subdued at 1.1%. In fact, all of that, if you look at the estimates, anywhere from 6 to 6.4% for the entire year. Relative to the world is expected to grow at 3%. Advanced economies are expected to be flat, right? So we're in a very good sweet spot, I must say. You know? The investment grade rating still there, and always countries which have been upgraded, the question always is, what did you do with that investment grade rating? Right? It has to be felt. People say it's financial inclusion. That's the holy grail. But really, at the end of the day, it's really creating more jobs and foreign direct investments. We are in the market. We see more of the portfolio investments. These are what they also say, probably hot money coming in and out depending on on where the winds blow. But we're also tracking foreign direct investments because that also actually ties in with the market. If there are more factories, there are more businesses, companies are putting shop in the Philippines, there will be more need for them to fundraise. So we're very keen on more activity in the real economy because we want to mirror the growth in the real economy. We're in the financial market. That's really a super highway, if you may, where funds go from those which have the funds to those who are in need of the funds. We want to mirror that. So all of this is very important to us as we do our strategic planning. And you could see here, inflation and interest rate. As I said, inflation, if you look at the headline inflation rate for 2015 was at around 1.5, 1.6%, right? It's very, very subdued. You look at the core inflation, it's probably right around 2.1%. So that's a good thing simply because people are able to enjoy their resources, no? What they call it the wealth effect, right? When people, because of the low interest rate environment, suddenly feel they are wealthier because they have more funds, that they have more access to funds at lower interest rate. We want that wealth effect to actually trickle into the economy because we're essentially a consumption-driven economy. 70% of our total GDP is consumption-driven. So that wealth effect is important insofar as people actually enjoying that, buying probably over and above just the house or probably providing more for the retirement that would surely come. And that's what's more important as we look at the long-term health of our country. So interest rates obviously is very, very low. Depends on probably the next guidance from the Federal Reserve. But right now, I think it's more, the consensus is probably a status quo of the situation where interest rates will remain to be low. And foreign direct investments, you could see been sustained in terms of growth at 5.72 billion from 2014 to 2015. The big story, as we all know, is the unsung heroes, right? The heroes of this economy, they would always say, is the 10 million Filipinos working outside of the country. The view is for them to actually eventually come back because there's more opportunities. But right now, the 10 million Filipinos are probably not just the base level workers, but even the skilled workers. You're looking at engineers, doctors, and even the professionals. And that's raking in more than 25 billion US dollars a year, when probably 5-6 years ago, that's probably right around $18 billion only. So you could see from a period of 5-6 years, that's actually grown exponentially. And that has, again, as we could see, brought in more funds into the economy, driving consumption, not just in terms of real estate, not just in terms of hard assets, but also in terms of other spends. Like they could buy probably consumer goods. They could also actually bring that into the financial sector by way of investment, not just in banks, but we're also seeing an uptick investments through the stock brokerages into the equity markets. No? As we see more and more of the online trading. If you're abroad, you would look at probably you'll say, how can I monitor my investments? But because of the online trading facilities now being more offered by more brokers, they're more confident that they can track their investments. And this is a snapshot in one slide of where we've been. Look at the growth rate compounded for the last 6 years. We're at 14%. And I would say the story has always been that a market is also to be gauged. If you look at the health check, is it a resilient market? We define resiliency to be how fast are you able to recover from shocks, right? And the world was shocked and shaken back in 07, 08 by the global financial crisis. We ourselves were shaken. That was in 08. But look at 09. From 09 onwards, we actually bounced back. So it just took us 1 year to bounce back. That's a sign of a resilient market. How quick are you able to rise back on your feet from a fall, right? So that's a very good indicator of the financial health of the market. Although last year we saw that our market dipped by 4%. But for the past, we were actually from 09, 10, 6 years after 09, we were actually one of only 2 markets in the world that actually registered growth for that succeeding 6 years after the financial crisis. So that's a very good indicator that there's more and more interest and more opportunities actually being considered by more of the investors, right? But right now we're up by 5.8%. Markets go up and down, right? If you talked to me last week, it would have been a different percentage, but we're actually more looking at what's in store after June 30, right? When the new president, the new government takes office, and not just the new executive officers, but also the new congressional officers, the Senate and the lower house. Because what we're looking at would be what would be their economic agenda, right? And they always say, we've tracked this for the past, probably since 1992. The 12 months immediately after an election, we see the market uptick by 25%. Right? So 12 months, probably we might call it that's the honeymoon stage, or it's really there's a ray of optimism. People are really just very excited about the market. But hopefully that will again kick in this year after June 30. Right? As long as the elections, as they say, was viewed to be credible and honest, whoever is the winner would always be, I would say, more really within our control how the market goes compared to just giving it over to the politicians. So again, these are important vital statistics, if you may, of the market. In terms of the total market capitalization, we're right now at around 14 trillion Philippine pesos. Look at the domestic, probably it's around 12.3. We do have a couple of cross-listed foreign companies listed in our market, and that's we're hoping to grow that more. Why, if you may? Because we want to be a global exchange. Now, we have cross-listed companies based out of Canada, companies based out of Singapore. We want to grow that universe better and more, simply because I think access to capital right now is not bound by geography. With technology, with funds actually positioning where there are opportunities, the important thing is for your market to actually be very accessible and very fair. So that's a growth in terms of market cap. How are we doing in terms of average daily trading value? Well, compared to last year, we're down by 22%. Right? Any given day right now, we're doing just below 7 billion Philippine pesos. We ended the year at around just below 9 billion Philippine pesos. But what we're seeing is, actually for the past 4 weeks, we're seeing this number to be actually on an uptick. So we expect this, in fact, as we look at the pipeline for companies who either want to do an initial listing, that's what we call the IPO, or companies who want to do additional fundraising, it's really going to be a question of scheduling, because there's more and more of them actually timing it after the June 30 taking, right? So it's now a question of would the financial resource available in the market be able to actually take up the offerings that we expect to see in the market. So I think the answer there is that people are lining up even their allocations, lining their ducks in a row, if you might say. But really what's important is for us to not be complacent, because it's a very competitive marketplace, very competitive agenda in terms of where the funds would go, and there's no loyalty, I must say. When you look at funds, they go where there are opportunities to make more money. And I think conventions like this would always be helpful to actually relay the story of growth in the country, right? But that being said, opportunities abound, but there are also a lot of risks. You're looking at probably the most critical of the geopolitical risks, all the security issues that we're facing, global economic concerns, and all of these stories that we're seeing out of China slowing down, the US still not out of the doldrums. Europe, probably more and more countries there are still not yet able to actually break out of the Eurozone crisis that they saw back in 2008. And that's still causing a lot of drag in our economy in terms of market risk. We're also impacted to a large extent by market risks, because these, as you see, interconnected funds, if there's movements out of China or Japan or in the advanced markets, expect the movements to impact the Philippines. We cannot, as they say, decouple the Philippines from the rest of the world. That theory has long been debunked. We are interconnected. As we already know, the incoming cabinet and the incoming president has been viewed to be positive, right? Because the elections reflect an overwhelming mandate. Let me say, from, people expected just 30% probably for the front runner. What we saw was more than just 30%, right around 40% mandate. What are the economic agendas? What are the themes that he has communicated publicly. I think 1, 2, 3, and 7 would be important for the business sector. 7 being the income tax, being probably calibrating it to be more progressive. But I would say also the tax administration and actual implementation working hand in hand with business. And we expect to work with them and the cabinet on those fronts. Right? Back now to our exchange, the PSE. While we develop more products, we develop the infrastructure as well as the technology. We also build base in terms of the efficiencies and the competencies of our people, because you're only as good as your people. And an example of the products we're building is actually dollar-denominated securities. First, since 2003, when we're actually going to offer US dollar-denominated securities. Right? And this would actually open up a lot of investment opportunities for those with US dollar reserves. Right? And PPP, because the story has been about infrastructure, we want infrastructure companies to be able to access the market, whether for purposes of fundraising and building their brand, or later on, if it's a 30-year life, at some point there might be a milestone where they need funds, right? So we want them to have access not just to project financing, not just to traditional loans, but including markets, right? Because market fundraising would be at a lower price point and faster. You can even do an overnight fundraising, probably depends on your needs. No? So that's how quick you can fundraise when you're listed in the market. Again, in closing, I'd like to say the best is yet to come. We're ready for greater milestones. And if this were the Philippines, if this were a corporate, Philippines Inc. is not yet at its peak. No? We're years away from probably achieving the dream of being an advanced emerging economy. We are classified as emerging market. Our dream right now, realistically, is to be an advanced emerging market. No? And I think that's a realistic goal, to be along the ranks of Malaysia and hopefully over time Singapore. Right? And that doesn't happen overnight. As Sheila said, we're probably, we're not the prettiest girl in town, but we're turning heads. So that's a good point. That's a good spot to be in. And I think with everyone's help, I have no doubt that we can make this happen. All right? So thanks again for listening, and have a good day, everyone.